Assalamu alaikum. Dear students of IGCSE and O levels, hope you are doing good. In chapter 1, chapter 1 of Catherine Cocom, last time we have solved question number 5. Now, today I am going to solve and explain question number 6. This question is also based on the accounting equation. And what is accounting equation? Assets equals to capital plus liabilities. As you can see in this question, John is a trader. His statement of financial position at 31st December 2020. His assets are machinery, motor vehicles, inventory, trade receivables, and bank. And liabilities are capital and trade payables. Both sides are equal. On 1st January 2021, the following transactions took place, and we are required to prepare the statement of financial position of John Traders on 1st January 2021 after the above transactions have taken place. So now, in order to solve this question, first of all, you need to write the name of the business. So John Traders, statement of financial position as at 1st January 2021. Remember that whenever we are preparing the financial position, it is also called as a balance sheet, we have to write as at. Sometimes students they write for the year ended. For the year ended, we write for the income statement. For the financial position, we have to write as at, which means on 1st January 2021, the assets and liabilities of the business are. So now you write all the assets, as you can see that from the question, just like we have machinery, motor vehicles, so all of them I have written here. And similarly, on the other hand, the liabilities. And down you can see that I have written all the assets and liabilities again, so that whatever working is required, I can easily show my working. And then the final answer I will place here in the financial position. So in the beginning, as you can see that machinery value is 19,000. So I am writing here 19,000. The value of machine is 19,000. Then the value of motor vehicle is 6,000. Inventory, this is the closing inventory. And you know that closing inventory means that the items which are unsold at the end of the year, which is 4,900. Trade receivables, goods sold on credit, and the amount is receivable from credit customers. It is called trade receivables. Amount in the bank is 10,100, and trade payables 8,000. There is no effect on capital in this question, so that's why I didn't write capital here. Otherwise, we can write capital here as well. So let's see each transaction one by one. A check for 3,000 was paid to a credit supplier. So we know that as per the double entry system and the accounting equation, every transaction has two aspects. So a check is paid by the business, which means that the amount is gone. So from the bank, 10,100. Now here you write minus 3,000. And paid to a credit supplier. So the credit suppliers will also decrease. Before we have to pay 8,000 to the credit supplier. After paying this 3,000, Now the balance of the credit supplier will decrease. That's why I deducted this 3,000 from trade payables. Trade payables, another name is accounts payable, or you can say trade creditors. Then in the second transaction, a credit customer paid 500 in cash. Credit customer means account receivable paid 500 in cash. So credit customer paid the amount, business John traders received the amount, so the cash will increase. So here I am writing cash, and my cash will increase by 500. And account receivable, this is my trade receivable. Trade receivable will decrease by 500. So one aspect that the cash is increasing with 500, and other aspect that the trade receivables are decreasing by 500. Now, in transaction number 3, a loan for 8,000 which was paid into the bank was received from Lenders Limited. So, business has received a loan of 8,000. So, here I will create one more name, loan, and in the bracket you write the name Lenders Limited. So, amount is received in the bank. Again, the bank account will increase. So, this will be 8,000. And on the other hand, the liability of the business will increase by 8,000. If you want to write Lenders Limited here, no problem. We can write here as well. So, all right, I am writing here Lenders Limited. Say here loan from Lenders Limited. So this will be 8,000. And in the last transaction, a check for 7,000 was paid for an additional machine. So machine is increased by 7,000. The business bought the machine. So machine is increased. And the business has paid by check. So from the bank, 7,000 will decrease. Okay. Now we have completed all the transactions. Let's take the total here. So 19 plus 7, this will become 26,000. Motor vehicles is 6,000, no change. Inventory will remain the same. Trade receivables will become 2,500, 3,000 minus 500. Then bank is 10,100 minus 3,000 plus 8,000 and minus 7,000 will give you 8,100. And trade payables 5,000 and loan from lenders 8,000. Now these values we can write here in the financial position. So our machinery is 26. So I am writing here 26,000. Then motor vehicle is 6,000. It is 6,000. Inventory is 4,900. Is this. Trade receivables 2,500. Bank is 8,100. Cash I have already recorded. And trade payables 5,000. Loan from Lenders Limited is also written. Now we need to add both sides. So, and capital, the value of capital was 35,000. So I am writing here capital 35,000 because there was no change in the capital. The owner didn't bring any further capital into the business during the year. So Our liability side total is 48,000. Take the total of the asset side 26,000 plus 6,000 plus 4,900 plus 2,500 and plus 8,100 and then 500. So this side is also 48,000. Our balance sheet is equal, both sides are equal, and our job is done. So now you can see that we have recorded all the transactions